It's Matt Orton, Head of Advisory Solutions and Market Strategy, Chief Market Strategist at Raymond James Investment Management, joining in. Matt, great to speak with you again after a couple of days, but it seems like so much has happened in those couple of days. We last spoke in the context of the budget, but the game has changed, isn't it, from an Indian perspective?
Yeah, good morning, Tamana. It absolutely has. It's amazing how much happens in such a short period of time. But I think it's certainly productive. You know, last time we spoke, we were talking about the potential implications or maybe negative read-throughs from some of the budget that had passed. And now we're talking about the optimism that I think not only reflects Indian investors, but foreign investors, hopefully, towards India. And hopefully it's this sentiment change that will really start to maybe have some of the FIIs continue to cover short positioning in India, though some of this tech news isn't going to help in the short term. To me, if we can have a follow through from the really good developments on the trade side, along with perhaps some more clarity from the RBI that starts meeting today, I think that maybe will provide some stability on the currency side. And if you can have that coupled with, I think, more visibility towards strong earnings growth or the direction of positive earnings growth for India, I think that provides a very powerful recipe to hopefully have more foreign investors pay attention to India as perhaps a complement to some of the AI winners that they may have had in South Korea and Taiwan, and start maybe diversifying a little bit more across their EM complex exposure.
Matt, morning. Alex here. I'm just wondering what you think about the rupee and the way that it's moved even yesterday. It's come very close to that 90 rupee per dollar mark, and from a peak of 92 that was hit at the end of January. What does that mean from the outside in? Does it make the prospects of investing into India that much brighter, considering that there are expectations that are pointing towards a move towards 88 in the near term, possibly by the end of March?
Yeah, you know, Alex, I think it's definitely constructive because while the rupee certainly has depreciated over time, I think that's a given with a lot of EM currencies, it happens over longer periods. And I think the rapid depreciation that we've seen over the past year or so has really been a challenge to foreign investors, especially as the US dollar continued to depreciate as well against other baskets of currencies. So that stability and perhaps appreciation of the rupee relative to the dollar, I think will help foreign investors have more confidence that perhaps the very pronounced downtrend is starting to come to an end, and you don't have to worry about hedging your exposures. You can have more confidence perhaps in some of the revenues that these companies are making, and that being directly translated to earnings. So I certainly think a break through 90 and continued appreciation be very constructive from the foreign investor perspective.
Matt, good morning. Hira on this side. You know, I want to talk to you about the AI sell-off that's happening as well. I mean, you've called 2026 as a show-me year for AI as well in the past, right? I mean, with Anthropic, with what's happened, with the AI tool that they have released as well, which is absolutely legal, you've seen pressure that's come in terms of traditional IT services in yesterday's session in the US. How are you looking at it in terms of impact on Indian IT, number one? Because a counter to this is where the government has provided support to IT services as well to some extent, specifically when you talk from the data center side of it. So do you think a sell-off that could come in terms of Indian IT services right now could potentially be an opportunity to enter from a longer term perspective?
I do, Haral. I think that's a really good point because, like you said, this is a show me year with respect to AI. And another key tenet of my outlook for 2026 really was that the rising tide of AI isn't going to lift all boats anymore. There's going to be increased bifurcation. And that's exactly what we're seeing between semiconductors and software companies. And so the pressure within the AI trade has largely been focused in software because of the concerns that AI is going to eat away a lot of their businesses. We can debate how quickly that's actually going to happen, how much you might need some of the software companies for training, et cetera, but it's not a trade I'd want to be in. Indian IT services, though, are not software companies. In fact, I think Indian IT services sit at a really interesting juncture because they are helping the users of artificial intelligence that we're only seeing more rapid adoption take place actually integrated into their businesses. So with the headwinds of tariffs and perhaps more punitive actions being on the horizon taken off the table because of this trade deal, I think that only increases the appeal of Indian IT services companies that really sit at the forefront of helping both EU and US companies integrate artificial intelligence into their operations. So I would look at a big down move as a buying opportunity for some of these IT services companies. Obviously, selectivity matters, but I think the trade is still there.
Okay, Matt, what are your post-tariff easing top picks? What are you liking in India right now?
Yeah, so Tamana, to continue on the IT theme, I think HCL is very interesting. Really good earnings. I was very encouraged by the results that they posted, and they sit squarely at this AI integration. That's a growing piece of their business, and I think they're going to be poised to be a winner from US and EU companies in the AI space. So that's certainly one to look, especially on a downdraft. Another area that I think looks really attractive because of this trade deal, and also from the emphasis that the budget put on agriculture, is going to be M&M. This is a company we've talked about a lot in the past. I think it's a long-term winner, and I certainly use downside opportunistically because they have such strong exposure and a growing presence in the agriculture space, which is an underestimated or underappreciated part of their business, and I'd say ability to drive margin growth. And finally, a name that I've increasingly liked since the last time I was in India back in June is Adani Ports. Fantastic earnings that the company just reported. I'm actually going to meet with their management team next week when they're in New York City. And this is a company where you're continuing to see their logistics business grow. Having, again, that tariff headwind taken out of place, I think will allow the company to strike more strategic deals, especially in the Middle East, which is a big growth area, and maybe perhaps make more inroads in Australia and Asia Pacific as well. So that's another name, even though it's up significantly over the past day or so, it's a name also to maybe look at using downside opportunistically because their growth trends are very robust.